Paying for a college education can be one of the biggest budget challenges for families and students. The tax credits and deductions below can help reduce your tax bill and indirectly reduce your college costs. If you are a college student, you or your parents, if you are a dependent student, may qualify for federal tax credits and deductions that allow you to recoup some of the money you spend on college expenses and student loan interest. The American Opportunity Credit. The amount of credit is 100% of the first $2,000 spent on qualified education expenses and 25% of the next $2,000. The maximum credit per student per year is $2,500. College years covered the first 4 undergraduate years of college. Who is eligible? Parents of undergraduate college students and independent college students enrolled in a recognized degree or credential program. Income limits: single filers with modified adjusted gross income or MAGI less than $80,000 and joint filers making less than $180,000 may take up to a $2,500 credit. A reduced credit is available to single filers with MAGI of $80,000 to $90,000 and joint filers with MAGI of $160,000 to $180,000. Qualified expenses, tuition, required fees, and required course materials, including textbooks and computers. Room and board, insurance, student health fees, transportation, and living expenses are not included. Attendant student must attend an eligible institution at least half-time during the tax year. If the credit is greater than the amount of tax you owe, you can have 40% of any remaining amount of the credit, up to $1,000, refunded to you. If the Internal Revenue Service, or IRS, audits your return and finds that you claimed the credit when you were not eligible for it, or if you do not have the documents to show you qualified for it, you must repay the credit you received with interest. The IRS may also charge you an accuracy or fraud penalty or ban you from claiming the credit for up to 10 years. The Lifetime Learning Credit. Amount of credit up to $2,000 per tax return, which is 20% of the first $10,000 of qualified education expenses paid for eligible students. College years covered all college years, including years needed to complete a postgraduate or professional degree or to complete courses to acquire or improve job skills. There is no limit to how many years you can claim the credit. Who is eligible? Undergraduate and graduate students, non-degree seeking students, vocational students, and parents who pay qualified expenses for these students. The courses do not need to be part of a degree or certificate program. Income limits: single filers with MAGI less than $80,000 and joint filers with MAGI less than $160,000 may take the full $2,000 credit. A reduced credit is available for single filers with MAGI of $80,000 to $90,000 and joint filers with MAGI of $160,000 to $180,000. Qualified expenses, tuition fees, and required course materials for one or more courses to acquire or improve job skills. Room and board, insurance, student health fees, transportation, and living expenses are not included. Attendance enrollment by a family member in a college or vocational course during the tax year. Your family includes the taxpayer's spouse, and the taxpayer's dependents. The Student Loan Interest Deduction. Amount of the deduction: a maximum of $2,500. College years covered all college years, including postgraduate education. Who is eligible? Students and parents with federal or private education loans in their name that they use to pay for education expenses for themselves, a dependent student, or a spouse. Income limits: single filers with MAGI less than $85,000 and joint filers with MAGI less than $145,000 may deduct the full $2,500. A reduced deduction is available to single filers with MAGI of $70,000 to $85,000 and joint filers with MAGI of $145,000 to $175,000. Qualified expenses: the loan must have been used solely to pay for tuition and required fees, required books and equipment, transportation, and room and board. This includes interest on credit card debt if you used the line of credit only to pay for qualified education expenses. Expenses paid by a loan received from a person related to you or from a qualified employer plan are not eligible. Attendant student must attend an eligible institution at least half-time during the tax year. You can take the deduction for every year you pay required or voluntary interest on the loan until the loan is paid. Only the person legally obligated to repay the education loan may take the interest deduction. You cannot deduct loan interest that is eligible to be deducted under a different tax rule. For example, if you use a home equity loan to pay for qualified education expenses, the interest is deductible as mortgage interest but not as education loan interest. If you did not pay any interest on the loan during the tax year, you cannot claim this deduction. Make sure you receive your 1098T and 1098E forms. Your college should send you a 1098T form in January, reporting the tuition expenses you paid the previous calendar year. The form will include only the qualified expenses you paid. It won't include what you paid for room and board or other non-qualified expenses. You or your parents will need to file this form to claim either the American Opportunity or Lifetime Learning credits. To take the student loan interest deduction, you'll need to file the 1098E form, which you should receive from your loan servicer if you paid more than $600 in interest during the previous calendar year. If you paid less than $600 in interest, you may still take the deduction, but you may have to ask your servicer for the form. Using these tax breaks, if you are eligible, can offset some of the costs of higher education. To learn more about tax breaks for education, visit the Internal Revenue Service website.